Pelham, what are you expecting from Sony?
Well, I mean, right now expectations are, as you said, pretty low. Both Nintendo and Panasonic missed their earnings from last year. For Sony, that's a figure of 146 billion yen in operating profit. Now, we think Sony may just be able to beat that, perhaps 150 billion. They have a few advantages that, say, Panasonic doesn't have in terms of strong sales of video game software, and they have a reasonably well-performing financial services division.
So video games and financial services,
I know,
that's
it's bizarre, isn't it?
That is bizarre. Tell us about financial services.
Well, they've got a very good life insurance business and a growing banking business, and this contributes about 25% of their profits these days.
So Japanese conglomerate, huh?
Yes, absolutely.
But video games are doing well.
The key area is going to be video games. Net, they didn't make any money in video games this time last year, and we're hoping they're going to make sort of 25 billion or so but this year. They've had some big successes with Gran Turismo 5. They've reduced the costs on making the PlayStation 3. There was the Move as well, which was probably profitable. So all told, hopefully they're able to come out ahead.
Now, what do you think of their strategy to allow these video games to be used by people that are using smartphones that are powered by Google? Because this is a very different strategy to Nintendo.
Yeah, absolutely. Well, Sony and Google are working quite closely. Obviously, they're working together on the TV side as well. And for Sony, the Sony Ericsson's business, Android is the escape route. So there are obviously sort of synergies for working with Google, but it also puts the situation in Nintendo quite complicated because they're self-contained, and should they be moving out?
Now, you mentioned TVs. This has been a weak spot for Panasonic, for Samsung, for LG. Everybody's having trouble with TVs. Can we see Sony turning around that division at some point and actually making money? I mean, it is selling 3D TVs.
Well, it may even make money this quarter, actually, but not a lot. That's the trouble. Sony's taken a huge amount of costs out of their TV business by finally moving to outsourcing. They've closed factories in Japan. They've sold off factories overseas. They've gone to the sort of Taiwanese, Chinese outsourcing model. Well, they've got greater flexibility. If business isn't so good, they can, reduce their orders, and if business is good, they can place more. Hopefully, they're able to overcome what has actually been a pretty dire time for TV
one of the
makers.
other big factors, of course, for these Japanese companies and Sony as well is the yen.
Yes, I mean, if you were starting this time last year, the yen was hurting. Since then, it's gone from about 90 to 83. It's been really tough, and so it'd be really impressive, as I said, for them to even match last year's performance.
And this is where the domestic market comes in. Japanese buyers are suddenly spending a bit more money.
Well, they had some sort of incentives to buy consumer electronics for sort of energy reasons in the last quarter. Hopefully those helped.
Let's look at the big picture. I mean, Sony has it really isn't doing well as a great innovator anymore, is it? I mean, it's being blown out of the water by Apple, as many companies are. But, I mean, this was the company that came up with the Walkman.
I know.
When is it going to be a great innovator again?
Oh, it's going to be interesting. There's an interesting similarity you can do with English Premiership football. You can call Apple is like Manchester United, the club that just gets better and better each time. Nintendo's like Arsenal, the young team, and everybody's always wanting to watch. Then Chelsea's like Samsung, the team that's come from nowhere in the last 10 years to really play. And guess where? Sony is Liverpool.
All right.
But maybe it's Liverpool where Liverpool, wants to be in a year's time. The stuff that Liverpool is doing, like changing its manager, getting rid of players, that's what Sony did about a year and a half ago. So, hopefully, much like people are hoping that Liverpool's going to get better, Sony is on the mend as well.
Okay. And finally, the share price down about 9% if you look going back a year. 9.5%. Where is it headed from here?
I think it's going to head north. I think that this is the year when a lot of the benefits of Stringer's restructuring is taking a lot of costs out of the company. And of course, when you take costs out, you incur costs. You have to pay people off as they're retired and stuff like that. So hopefully 2011 should see decent earnings growth for Sony and people start to re-rate the company.
Okay, well, next time you come back with a analogy, you're going to have to use like fashion brands or something for me.
I'm sorry.
I don't know much about football.
Well done.
But no, we appreciate that. Thank you very much, Pelham Smithers. Thank you.
It's been a pleasure.